There are new rules on capital gains tax which apply to the sale of UK residential property made by UK residents that are now in place, that came into act on 6th of April this year, which means that for residential property, all disposals must be reported and paid within 30 days of completion. The rules, who do they affect? Well, the rules affect anyone who owns a property other than their main residence. Stricter capital gains tax rules will apply to those properties, including buy-to-let properties, second homes, holiday homes, and homes with significant grounds and gardens, because those don't benefit from the principal private residence relief. What happens if you don't report or pay? Well, if you fail to pay or report the capital gains tax within 30 days of completion, then HMRC will apply the penalties and interest, which are not associated with the normal tax filing deadlines linked to the 31st of January. They're all linked to the date of disposal, so you must act quickly on this. Solicitors and agents, estate agents, might be up to speed on this, but it's really down to the taxpayer to be aware of all times, and that's the way most tax legislation is drawn. So how do you report it? Well, the report is submitted to HMRC on an online form, basically. If you've got a self-assessment account already set up, or we act for you, we can submit that. If not, you can create a capital gains tax on UK property account, and that allows you to report the disposal of any UK residential property after 6th of April 2020. You pay the amount of tax through there, and you can look at any previous returns if you've got multiple returns that you're making. There's some exemptions to making that return, such as where no tax is due, but as the deadline is short, it only gives you limited time to get all the information together and work out if you need to submit a capital gains report or not. So you need to really be on it with details from when you bought the property, any valuations, and so on. Non-UK residents must also report all sales and disposals of UK property within 30 days, even if there's no tax to pay or they've made a loss. So what do you have to do now? Well, it's essential that you act now, and remember that this has to be done. It's easy to overlook these new requirements when you're selling a property and you've got so much else going on in your mind, but that information must be reported to HMRC within 30 days. So when we act for you, please keep us in the loop sooner rather than later. These are things that cannot wait to deal with your personal tax return towards the end of the year or at any time. So if you're selling a property in May or early in the tax year, you can't wait until over a year later to think about it. You've got to be dealing with it then. And rules on capital gains tax are complex, so you really should be seeking expert advice sooner rather than later if you're sure how it affects you or affects your clients. So if you've got any questions about that, or the implications of selling a property, property tax planning in general, you've got concerns or friends or clients, please do contact the expert team at Davis Grant and we'll be happy to help.